All right, all right. Welcome. This is Jay Scott. Welcome to the Crypto Cowboy Show. We got a lot to talk about. We got to talk about Bitcoin. We got to talk about where the crypto market is, what the heck is going on, and is it still a viable place where we can catch up on our retirement? Well, the short answer is absolutely. All right, so let's get started here. All right, so first of all, let's move over to. All right, so I'm not a financial advisor. This is not financial advice. I'm just a guy on the internet talking about education. All right, so let's talk about this. So, is Bitcoin underwater? Well, technically it is. Hold on, back up here. Yeah. So last week we entered this bear territory because we had a decline of 20% or more from its peak. So it was up around 125, almost 126. Now it's down around 95, 98. 91 even, dropped below 90 even. So it was 126 on October 6th, but things turned around. It got really sour. And where are we now? Well, there's some analysts out there that they don't think we're really in a crypto winter here. According to this guy named Louis Lavelle, chief executive of crypto investment firm Frontier, yeah, he doesn't think that we're in a crypto winter. He says this doesn't look like a classic pattern where everybody gives up and the price collapses by 70, 80%. No, what we're talking about is watching Bitcoin. It's now learning how to become its own asset. And it's being traded like a institutional asset, like the stock market. So this is interesting because this period of declining prices distinguishedly different because Bitcoin is a mature asset class, enhancing its institutional adoption and liquidity is evidenced by reports that JP Morgan will be accepting Bitcoin as collateral. Big guys now are all on board, right? So again, since 2024, everything changed for crypto, for Bitcoin. If you thought it was going to go away, if you thought the government was going to maybe outlaw it, no. Wall Street's making way too much money. So the legitimacy of this asset class is absolutely here to stay. What we're talking about today is really sort of the noise. It's going to go up and down, but we're long-term investors using Bitcoin primarily to catch up on our retirement. It's still valid, but I just want to touch base here and just give you some ideas about what we're talking about in the crypto market. And so let's take a look here. So we're going to get some of the bad news out of the way, and then we'll get back to some of the good news. So crypto's just stuck. And it's because the rest of the world is just wrestling with all these macro issues. And you can see that the S&P 500 isn't looking too good. It looks like 2008. So what we see here in November, we're seeing here that, wow, up here, 7.48% decline in November in 2008. And here we are at 3.26 here in November. So the stock market's not looking great, but it's still not crashing by any means, but it's just uncertain, a lot of uncertainty. Is the Fed going to lower rates again? Are the wars going to come to an end, or are they going to accelerate? Are there more wars coming? Is global liquidity really going to come in, or is the Fed going to continue tightening? Are we in a recession? Is AI going to take everyone's jobs? There's just a lot of uncertainty out there. So crypto's just kind of doing its thing, bouncing around. But folks, it's still around 100,000. And again, we are using this as a long-term asset to help us catch up on our retirement. So there's just a lot of uncertainty these days out there. So I think that's why crypto is just showing that it's going to bounce around a little bit. It's not completely untethered from macro events and from the stock market. And that's okay. Again, long-term, right? So let's talk about Bitcoin distribution. So this is interesting. There's only 1,065 million Bitcoins left to be mined. So almost 4,000 of Bitcoin are lost forever. So we've always got to take that into account. And look at how much treasury companies are investing. So we've got treasury companies down here in the yellow. And so that's kind of interesting. That's a lot of Bitcoin that's being bought up. You still got individuals with the most, but we've got, here's our lost over here. And of course, Satoshi's got the biggest wallet still, but look, governments are buying, ETFs are buying, treasury funds are coming on. So again, this is only going to accelerate, which allows me to believe that we're going to get to that $1 million per coin at some point, probably again sooner than later. Things don't look great now, but this is the minutia. This is the noise that we just need to really not pay that much attention to. These are the kind of things we want to pay attention to. Why we're investing long term. So I think this is interesting. This was a little bit. This probably was before 21 days ago, but again, 95% of all the Bitcoin will have been mined. That is 5% remaining. 4% will be mined by 2035. So from then on, from 2140, everyone will be fighting for the last remaining 1%. Again, this is a very important slide. This, again, tells me why we're going to a million or above, because it's the only asset that's capped at 21 million. And we're 95% all the way there. So this is not being inflated. It's barely noticeable right now. And with as much demand that seems to be there for the foreseeable future, the price of Bitcoin should be going up. You might be wondering why it's not going up now when we still have all of this, and we'll show some slides where we're still in lots of demand. There's some OG whales that have had Bitcoin for 10 or plus years that are probably in the billions of dollars worth, and they're taking some lifestyle chips. They're moving some stuff around. And it's not that they don't still believe in it. It's just that they're trying to cash some in. They also might be moving some of it off of their original wallets and into some of the Bitcoin ETFs. A lot of those original OGs, the whales that have been in Bitcoin for a long time, they didn't have an ETF to put it into. And they're getting nervous about having all their wealth in a cold wallet. So a lot of them are selling that and then buying the ETFs. I've done that myself, where I'm diversifying by having some in my cold wallets, but also some in ETFs and some in treasury companies, diversifying it so that all of my Bitcoin isn't in one place. I think that's a good idea. So that may be what's happening, and that's moving the price around a little bit, which again is just noise in the short term. So we still have a lot of room to run. This is the MVR Z score. We've talked about this before. When we get up into that red band, then we know that we've sort of hit that high level, that the market probably is as high as it's going to go for Bitcoin, and things will start to downturn. Now, there are some different things here. We're going to look at here that is it possible that this MVR Z score is not going to be as accurate to really call the bear market again? Because again, it looks like we've got plenty of room to run, but we've kind of hit the ceiling around 100,000. And anything can happen. We very well could still get to 150,000 by the end of the year, but we're going to have something dramatic happen. Probably not likely, which is fine. I'm okay. I mean, I'm buying more. When it drops, I buy more. You might want to think about that too, because we still believe it's going to be a million someday. So why wouldn't we want to get as much as we can when it's kind of down below 100,000? I still think Bitcoin at 100,000 is a great price. Bitcoin at 150,000 is a great price. I'm dollar cost averaging. I'm always buying Bitcoin. Well, we've also moved into the longest cycle for Bitcoin so far. It's stretching out. Things are changing. Is the 4-year cycle dead? A lot of people think it's dead, that it isn't going to be a 4-year cycle anymore. Things have just changed, right? We've got so much institutional adoption now that it's completely different than when a lot of these charts and a lot of these signals were created back when just retail was investing. So things are a little bit different now. And we're going to see, this is going to be really interesting, because by the end of 2025, the original 4-year cycle should be ending, and we should be potentially going down. And this little price fluctuation right now is freaking some people out. They're like, oh, this is the end. This is the end of the cycle. I don't know. I think things have changed so much now that we're going to morph into a completely new cycle, whatever that's going to be. Is it going to be a 5-year cycle? Is there even going to be cycles anymore, or are we just going to kind of see this slow growth up? I mean, we still have a business cycle. That's still about every 4 years. But even that can change. Actually, I think the business cycle now is stretched out and elongated. So I don't know. We'll see. Things are changing, folks, but we're long-term investors. We're investing for the future, and we still believe in this asset. But this kind of shows that the the Bitcoin 4-year cycle is probably up each having triggered this sharp supply shock, driving the major bull markets in the past. But we don't have that anymore. We just have we have so much institutional buying that I don't think we're going to have the 4-year cycle anymore, and I don't think we're in a bear market. I think we're just in this sideways chop for a while. We've been talking about the M2 money supply and how that actually is what drives Bitcoin's rise in price quite a bit. And you can see that in the blue line, we've got global M2 and then Bitcoin in the black line. So global M2 has been going up. Bitcoin's kind of been going sideways. At the very end there, you can see that liquidity's down a little bit. Bitcoin's down, but right now liquidity's back basically up. And this is what's interesting is that you can see the green line. It's turning up, but Bitcoin's going down. So again, things are a lot different. There was look at that correlation that just for many, many years. And then all of a sudden, whoop, and then Bitcoin's been going sideways, and now it's going down. So things are different, folks. Again, this is on the micro looking level. I still think that we're going to turn up, but maybe all this talk about global liquidity being the driver of crypto prices is maybe that's not as true anymore. I don't know. Things are definitely up in the open about what is causing Bitcoin's price rise and what's not. I mean, things are changing so fast that the OGs are like, I don't even know how to evaluate this anymore. Other than we just look at demand. And again, when you've got the ETFs still, you've got countries, you've got states, you've got these treasury companies that are buying it. There's a lot of demand there, folks. And to me, that's the good news. That is the real good news. And again, look at the adoption now. Look at all these banks. All these banks now are in one way or another allowing crypto to be used in different ways. And again, so this is just more demand. I think it's good news. So, that's all we got today. So thanks for watching. I just wanted to hop in, throw some slides up here and say, look, we're still in good shape. Don't worry about the short-term fluctuations of it. We're looking for a good year next year. And if not, and it goes down, let's buy some more because it's definitely not going to zero. Government's not going to get rid of it. It's an asset class that's here to stay. And it's our miracle that can help us catch up. And we just have to be patient. We have to have at least a 5-year plan, 5, 10, 15-year plan. And when we do that, we're going to be in good shape. All right, so that's it for now. We'll see you next time.